The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Mark from Sean Hackett. Sean Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
Super good. Really kind of looking forward to getting through harvest here and starting to talk about something other than what we've been focused on for a while. And obviously this week's crop tour is another step in that direction.
Yep. So speaking of crop tours, we've seen everywhere they went, there have been anywhere between 5 to 12 bushels, it seems like, over last year's averages when they went to the same area. Similar to what you've talked about here, Shawn, this is kind of what we've been seeing, what we've been expecting, and really the market hasn't reacted to it. So I guess your thoughts there.
Yeah, I mean, look, any crop tour isn't going to get the number right. It's just trying to take a stab at it. So I think it's more important to compare pro farmer results to past pro farmer results. It may not have the same, I don't think you can necessarily equate pro farmer to the USDA. But when you look at what they're finding, I don't think there's any oh my gosh, it's so much bigger than we thought. Or I don't think we're getting, oh my gosh, it's way below what I thought. I think we have what we think we have, at least according to what they're doing, is we have a very good crop. It's likely going to be modestly above trend. And I don't see anything of what they're coming out with that suggests that it isn't going to. What I'm getting is I think we've traded what they're saying. 185 corn, give or take. 54 or 55 yield on soybeans, give or take. I think we're trading those numbers, and I think they're confirming those numbers, but I don't think they're confirming anything larger or smaller. So the markets are sort of kind of yawning at it and going, well, we already know this. So that's at some point, Casey, you put a floor in when we've can't really trade anything more than we've already traded to the downside. In terms of how large is large, obviously more to come. USDA report comes out on September. Would fully expect them to raise yields again, but once again, I believe it's already traded. At the end of the day, the final arbiter, other than God himself, is the almighty combine, and that ultimately will tell you whether Pro Farmer or the USDA have got it right or got it wrong, and that's where you can start comparing. Well, this area the USDA had blank. What we're hearing is blank. And we're not really going to get those kinds of comparisons. You're going to have to get into late September before we really start making some meaningful comparisons where it counts.
Yep.
So.
Okay. All right, let's talk a little bit about the heat that we've seen. So this summer's been a summer of intense heat, followed by about a week or so, maybe 3 or 4 days of abrievement from that heat, and then we're right back into that heat. We are kind of in that abrievement period right now. Earlier this week, we saw some really big heat move across the west. You look at states like Texas, where you're seeing 106 degrees, and you're down into the upper to mid to upper 90s in the south, as well as in the Corn Belt there. So I guess, Shawn, as you look at this heat wave that we see going through right now, anything to worry about there as far as soybean pollination and anything heat there that we need to worry about, or is this kind of like where everything else has been? It's just enough heat to kind of mess things up a little bit, but not totally wreck anything.
Yeah, I mean, the problem with what you just said is that we've had a transient hot-cold weather pattern. And the way to really enforce damage is you need a sustainable period. What I mean by sustainable period, 2 to 4 weeks, at least 2 weeks. And we just don't seem to be able to put more than 3 or 4 or 5 days max together. And then that's just not going to be enough to really, like, in some respects, that's actually pretty good. Put a little heat in there and then take it away. So I don't really think the heat at this stage of the game, it would need to be more sustainable. And it doesn't look like it's going to be sustainable. It looks like it's going to keep giving and taking, giving and taking, giving and taking. And that's not really going to change the outlook for, crop potential, yields being above trend, that sort of thing. The Pro Farmer is showing what everyone thought is we have some good crops. And I don't really think corn fill or pod setting is going to be traumatically impacted by, 4 or 5 days of heat. It could on the margin, but not materially. So.
Okay. As you take a look at the cattle market, it seems like there's some stabilization on the wholesale beef side. You've seen some movement in cattle prices. And I guess as you look at that, there seems to be some choppiness there. I guess your thoughts on the cattle market.
Yeah, we have not been able to make material headway since last fall. And we've had, ever since the yen carry trade debacle, where we had that, kind of a risk off trade where the cattle market got squeamish, it really hasn't been able to recover. Suggesting that maybe there's more to it than just the macro forces. That maybe we're having some kind of an imbalance here. I would really say that 170 on the December live cattle market and 230 on the feeder cattle market for November. I really think those are really important levels technically to hold. If we fall much below those levels, then the chart looks pretty bad. And then the speculators start selling and the algorithm starts selling. And then and then the cattlemen start selling because now they're watching their profits erode. You know how this works. Everyone sells when the market starts to fall, not when it's on the rise. So, I'm not aware of anything dramatic that's changed, but the market's job is to look ahead, and maybe there's something we're missing fundamentally. I still see beef cutout prices fairly strong. I still don't see some kind of massive increase in supply outside of increased weights, but I don't know. All I know is the chart kind of got a little wobbly here, and it really needs to hold where we're at. Today's a Friday, right? And we really do need to close at or above those levels to keep the technical picture alive. And quite frankly, we need to start rallying the market, or else I'd be worried that we might have some kind of a longer duration, protracted decline, into the end of the year than maybe we might have thought. So definitely the first time we've seen some vertigo in the cattle market in quite some time. On the flip side, the milk price remains extremely strong. The hog price is rallied. We had a little correction, then we rallied strongly again. The cow market looks good to me, it looks super good to me the way it's trading. The milk market looks super good to me the way it's trading. Cattle market doesn't look so good to me right now. So maybe we're just changing the guard here, Casey. Maybe we're going to go from a super strong cattle market and a weak hog and milk market to where those are going to be the strong ones in kind of a flip, and the cow market's just going to struggle here. Maybe we've had high prices for long enough that we're going to have a little indigestion. I'm not sure. I just can't put my finger on this decline in cattle. We should have seen a bounce when the stock market bounced and when the yen carrying trade kind of ebbed. We should have seen that market bounce, and it really hasn't. And so I'm worried that when you don't get the market reacting the way that it should, that there's something else going on in the cattle market that's beyond negative macro forces. So we'll just have to wait and see how we trade today, and see if we can muster up a rally here and keep this technical wedge going, or else or are we going to have a much more serious correction to the downside.
Yep. Okay. All right. Lastly, Jerome Powell goes to have their big rich people meeting up in Jackson Hole right now, and so everyone's deciding what they're going to talk about, how they're going to kind of drive monetary policy over the course of next year, leading into the Davos summit. And I guess as Powell's supposed to talk this morning, I believe, like 9 o'clock or something like that.
I believe, yeah, that's the big speech.
Yeah.
The idea behind this speech is this should be his way of telling everyone what they're going to do in the September meeting.
Without telling him that.
Without telling him that. But I mean, people are going to be looking for a clear sign of what to expect. I mean, we had this incredible negative adjustment to employment numbers from the BLS that came out this week that knocked 885,000 jobs off of what had been reported, meaning that we reported 885,000 more job creation than actually was created according to the adjusted numbers from the BLS.
Yeah.
One has to wonder, how is that possible? And why would anyone take the monthly jobs number seriously anymore if they're going to be off by almost 900,000 jobs? It really begs the question, either why is this happening? Is there a problem with their methodology? Do they need to change their methodology? Or are they kind of rounding the edges here, shall we say, on some of these numbers? I don't know how you can explain. There's only one other time we ever had an adjustment like this. That was during the crash of 08, 09, which you would understand because it was such a dynamic time. And one could understand how, what was thought to be the case may not be the case because we just went into a free fall. But only that 2009 adjustment ever saw anything like this. So it paints a pretty negative picture on the U.S. economy and the consumer. If we have 885,000 less jobs created than we thought, had we come out with economic government jobs reports on a monthly basis that showed that, I think we would not be sitting here today without any rate cuts. Like, I mean, if we had these numbers coming out earlier in the year that were this bad, I think there'd have been a much different reaction to the market, a much different reaction to the Fed. I don't know. There's just a lot of things in here, Casey, that are really peculiar, but you know, just a shocker. I don't know what else to say other than to say, pretty hard to believe the Fed isn't going to get on board with lowering rates for a little while. I think that if they didn't know that number or weren't sure about that number, and now that we got that number, I just think, you know, they it's pretty hard to argue not having a period of lowering interest rates for a while and taking the pressure off. I mean, one of the reasons to keep rates high was that jobs were strong. People were staying employed. The job market was solid. Well, now we're finding out it's not solid, actually.
Right.
So, yeah, I'm not going to get into all kinds of theories about this, that, and everything else other than very disappointing that the numbers that we are supposed to utilize to make judgments about the economy and markets can be so much in error. Very disappointing to me as a market purveyor. It brings into question, what am I supposed to rely upon? What am I supposed to believe? What numbers am I supposed to be looking at? Because maybe the government numbers are so off. We just need to focus on other metrics. And I do that, by the way, but I guess my point is, I think everyone has to sit here and say, you know, maybe we need to be thinking about a different way of how we view the economy, because the numbers from the government, we just can't utilize it to be off that much. There's just no way we can utilize that kind of a margin of error, you know?
Right. For sure. All right, Sean. Well, I think that's probably a good place to stop, Sean. If folks want to reach out to you and get more information about what you're doing over at Hackett Financial, what's the best way to do that?
We have a Twitter page at Faradix11. We have a LinkedIn page, website, Hackett, Hackett, advisors.com. You know, like as I always say, you know, we're not junkies trying to create a social media personality online. We just put a few things out there from time to time that goes over our statistics, correlations, and cycles so that people can understand where we're coming from and how we look at ag pricing to see if what we do might be of value to those that are involved in agriculture that listen to your show.
Right on. Well, Sean, appreciate you being on the podcast, man. Look forward to it next week. Till then, have a good one, man. We'll talk to you soon.
You too, Casey. Thanks.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version over at the YouTube channel, which is Moving Iron Podcast YouTube channel. See us there. You go to movingironllc.com for everything Moving Iron related. And I haven't really heard a lot about it lately, so I guess it's sticking around. But TikTok, it's on shaky ground, Sean. So if you want to go check us out on TikTok, it's at Moving Iron LLC there as well. So Moving Iron Summit's coming up here in Nashville, Tennessee, November 4th through the 6th. If you're in the equipment business, if you're in finance, banking, whatever it is, if you're in one of those phases where you're looking at what's going on in the equipment business, this is a great place for you to check out. So if you are wanting more information about that, you go to movingironllc.com and click on the Moving Iron Summit tab up there at the top, or you can just send me email at movingironpodcast@movingironpodcast.com. So with that, I am Casey Seymour with Sean Hackett. Let's move some iron, folks. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.